All right, guys, so welcome to another exciting Talented webinar. And today's webinar, very, very interesting webinar. We're going to be looking at the concepts of risk management and psychology, right? So let's talk about this concept, risk management. Risk management and psychology. These two things right here is what makes up a lot of traders out there. Risk management, yep. Now, a lot goes into consistent as a trader, okay? Trading is not only about strategy. If it was that easy, then anybody could teach anyone a strategy, and then they take that strategy and then they make money, and then they're making money consistently. What makes a profitable trader is a combination of strategy, of proper risk, and a good mindset. That's all about psychology. So some traders might have access to very good trading strategy, but because they are lacking in terms of risk management and psychology, right? Even though they have something powerful in their hands, they are still not able to make something good out of it, right? If you can properly combine good trading strategy with good risk, with good mindset, psychology, you will be formidable as a trader. There is a way you should handle your money and risk as a trader. There's a way you should as a trader. There's a way you should act as a trader. All right, that's about psychology. So once you have all those things in place, you are going to be very, very profitable and consistent as a trader. All right, so let us go into this concept real quick. I'd like us to be out of here somewhere around 4 p.m. maximum. So this class should be about an hour class. All right, so in that 1 hour, let's delve into how you can update or upgrade your experience trading in the financial market. All right, so let's start by talking about the concept of risk management. All right, now we are all aware that the forex market or the crypto market is a high risk investment or high risk business. All right, now in a high risk environment, it is very, very important that you understand risk in itself, and then you have a plan to mitigate risk. When you look at the market participants, all right, the people that make up the larger share of the market cap, like hedge funds, like the banks, government, you know, all of these guys, or this category of people or establishment, they have departments solely focused on risk assessment, risk management, and all of those things. They have quant analysis. There's a lot of money goes into risk, all right? A lot of money and manpower. But you as a retail trader, that you don't even control anything in the markets, you don't have a system in place that can help you handle risk in the most basic form. All right. And the forex market, trading in the forex market is pretty much the only thing you can, the only business that you are the one that can really set your risk before you go into the market. You have the chance to set how much you are risking. Okay. Unlike other businesses that the risk is set for them, you just need to go with the flow. All right. So I want to give us a proper foundation, a proper perspective when we talk about risk. You need to have risk in place. Now, a lot of traders, again, lose money, not because they don't have a good trading strategy, but because they don't understand risk management. Now, let me give you For sure that in the last 2 years, I've spoken to a lot of people. And when somebody that just finished blowing accounts walks up to me, Toby, I just blew the account up. I'm going to ask them, how many trades did you take that made you blow this account? An average trader that blows accounts, it took that person, let's say 1 week or 2 weeks to blow that account. All right. But if you are really putting risk into perspective, if you are trading with risk, all right, blowing accounts should not really exist for you. All right. Even if it's going to exist for you, it's going to happen very, very rarely. You don't have to blow accounts as a forex trader. I know that in this industry, we usually celebrate beginners blowing accounts, and then we say that that is like your initiation into the forex game. But I'm going to tell you that there's no rep, okay? There's no medal of honor for blowing accounts. You are blowing account because you are not well informed, because you don't have the right risk management, you don't have the right money management. You cannot manage your money very, very well, right? Blowing accounts, trading in the financial markets is just like you starting a business and then you fail in that business. All right, possibly you didn't do your due diligence properly running that particular business. All right. Now, before I start preaching, let us go straight into this concept. Now, under risk management, I want to talk about two concepts, okay? And then we'll call it a wrap for today, and then we'll talk about psychology. Now, the first thing I want to talk about today is the concept of determining the right lot size for you, the right lot size. Okay, the right lot size, and then we're going to talk about the concept of risk to reward. Risk to reward. Okay, so I'll be using risk management and money management interchangeably, all right, in this particular session. Now, I want to talk to us about two aspects of risk management today. There's a lot of things we can talk about under risk management, but I want to only handle two things. Knowing the right lot size you should be using, right? And the concept of risk to reward. Once you have these two things in place, you'll be unformidable. Now, I say it a lot, the holy grail trading in the financial markets is not a winning strategy. The holy grail in the trading in the financial market is proper risk management. Proper risk management, then we'll look into that shortly. All right. What would determine your profit is adequately knowing risk, right? Before you can make a profit, right, there must be risk involved, right? So risk, if there's anything that is risky, that means risk gives profit. All right. But if you don't do your risk properly, risk that is not well done, right, is going to give you losses. That's why we are trying to talk about risk management. Okay. Now, how do you know the right lot size to use? I want to recommend. Now, when talking about the right lot size to use, are you supposed to be using a micro lot or a mini lot or a standard lot on every trade that you place? Now, when you see a particular trade setup, okay, how do you know the right lot size that you should be using? Or do you just guess and use a random lot size? Or because you have bills to pay, you just want to quickly double your account, or let's say make crazy amount of money because you are seeing people on YouTube flipping accounts, you also want to quickly flip your account. You don't even have a risk plan to flip your account. You are just being hopeful that things will go your way. Now, when we are thinking about risk management, you want to focus, right? You want to focus on what's it called? On securing your capital rather than making profits. Now, this is counterintuitive because I know that most of us are trading in the financial market because you want to make profit, right? But if your focus is more on making profit, you are going to neglect this particular capital here, right? You want to focus more on how to secure your capital. Okay, don't focus all your attention on making a profit. I know we want to make a profit. That's why we are trading in the financial market. But if you want longevity in this market, if you want consistency, your focus should be more on securing your capital rather than making profit. You know, what is the average journey of a Forex trader? Okay, they get in the market, they trade for two or 3 months, and then they blow account. After that 3 months, they go on sabbatical leave for the next 2 or 3 months, try and get back their courage, you know, maybe they try and save money again to come back to trade into the market. And they come back again and they've not really learned their lesson. They blow account again. They go on another sabbatical leave, another 3 months of not trading, 3 months of saying Forex is a scam, 3 months of thinking that Forex is not for them. It's not because Forex is not for you, it's because you don't understand risk management yet. All right. So talking about the right lot size, I want to recommend you do something that might really help you put things into perspective. I want you to have 2 kinds of accounts. Okay, in a second. All right. I want you to have 2 kinds of accounts. I want you to have a conservative trading account and an aggressive trading account. All right. You need to have a conservative account. All right. And have another account where you want to be aggressive. Okay. Now, on an account that you want to be conservative on, your goal is to grow these accounts steadily, steady growth, right, for conservative. And aggressive accounts, you are trying to flip it and do compound multiplication, compound interest. You want to maybe make 1,000% in 1 month. Guys, anything is possible in the financial markets. You are just one that will have a plan to achieve that. Don't only focus on the profit, also focus on the loss. In fact, you are more likely to lose trading Forex than to make money based on statistics. All right, so it will be unwise for you to, even if you feel that you are now a professional, it will be unwise for you to only focus on making profits and then neglect losses. Now, this is not you being pessimistic. This is just you being smart, okay, and putting risk in mind. All right. So you want to have 2 kinds of accounts. An account where you want to be conservative and another one for aggressive on your MT5 account. All right. So if you're trading with 10Trade, you want to create 2 accounts. Fund an account where you want to be conservative. So on your account that you be conservative on is the account where you put most of your capital. Okay, so your goal is to grow your account steadily. On an account that you are being conservative on, you are less likely going to blow your account, okay, in the lifetime of your trading. And then I'll show you how that's going to be possible. But on an account that you want to be aggressive on, because you are trying to make quick returns in the market. So that means you'll be risking more. So let's talk about risk management plan for each of these accounts. All right. So if you want to be conservative, my recommendation is that you want to risk 1% to 5%, okay, of your account per trade. As simple as this sounds, most people don't do it. And on an account that you want to be aggressive on, you want to risk anywhere from, let's say, 8% to, I recommend maximum 20% per trade. Okay, so let's start by putting things in perspective. What do I mean when I say you want to risk 1% to 5% per trade? So if you are risking 1% per trade, let's say you are trading with an account size, you're trading with an account size of $1,000. Okay, if you are risking 1% of 1,000, 1% is equal to what? That's $10. If you are risking 1% per trade, that means you are risking $10. That means if that trade does not go against you, you would have only lost $10 out of $1,000. Okay? And how many trades will you need to lose consecutively to blow your account if you're risking 1%? Please give me the answer in the chat box. If I'm risking 1% per trade, how many trades would I need to lose consecutively to completely lose my capital? Adekola said 100 trades. Okay, who also thinks 100 trades? Chidima said, oh, good. Now, let me ask you, yes, awesome. So we're all correct. Let me ask you a very honest question. If you have a strategy that has a win rate, do you think it is possible to lose 100 trades back to back? Give me an honest answer. Type in yes or no in the chat box. Do you think it is possible, if you have a trading strategy that has a win rate, you think it is possible to lose 100 trades back to back? All right? It's not possible. Even if you have a win rate of 20%, at least 2 out of 10 times you'll be right. All right? So there's no way you blow your account if you are doing this properly. Okay? So let's say you now increase your risk to, let's say, the 5% maximum. So let's say you are now risking 5% per trade. If you are risking 5% per trade, 5% of $1,000 is $50. So you would only lose $50 if that trade goes against you. Now, if you are risking 5% per trade, it's going to mean that to blow that account, you need to lose 20 trades consecutively, back to back. All right? If you have a strategy with an average win rate of, let's say, 40% win rate, I don't see anyone losing 20 trades consecutively. I've had losing streaks, okay, and I know people that have had losing streaks, but I've not seen any good trader that lost 20 trades consecutively. So in other words, what I'm saying is that if you are being conservative and then you are sticking to risk, the chances of you blowing your accounts is very, very minimal. That means you have a higher chance of being in the game much longer than everybody else. So the average statistics out there is that It takes an average of 90 days for a trader to blow an account. 90 days. Most people blow accounts in 2 weeks. Majority. Give them 2 weeks, the money is gone. Okay, I've been there many times as well. But if you are being conservative and truthfully you are sticking to your risk, you cannot blow your account in 90 days. All right, take it from me. The reason why people are blowing accounts is maybe, possibly, they don't even have an idea of risk, and then they are being overly aggressive. All right. So we'll talk about how to now know the right lot size to use shortly. So on an account that is conservative, maximum you want to risk per trade is 5%. On an aggressive account, you are risking 8% per trade. Now, my recommendation is for aggressive accounts, before you choose to be aggressive on an account, at least you want to be very, very sure about the win rate of your trading strategy, of your system. Okay, let me ask us a question now. How many of us here are already trading in a live market? If you have a live account that you're already trading, type in yes in the chat box. If you're already trading live, type in yes in the chat box. Please just answer that question. Let me do a quick poll, and I'm gonna ask you a follow-up question. Okay, so Victor's already trading, David as well, Basia as well. Who else is trading a live account currently? Adekola is trading currently. Okay. Now, so that means most of us are already trading, right? Is it most or some? Can I get more responses? If you're already trading live, type in yes in the chat box, right? Now, for those of us trading live, do you know the win rate? What is the win rate of your trading system? If you know the win rate of your system, type in that win rate. All right. What is the win rate of your trading system? That means if you take 10 trades, give or take, how many trades will you win or lose? All right. That particular question, in fact, most people don't know their win rate. Majority. All right. That's why only one person so far responded. Okwemi Abdullah. Your own win rate is 45%. Now, if you want to trade an aggressive account, you need to know your win rate first and foremost. Okay, because that will help you with your risk. Know your win rate. Know your win rate. And how do you know your win rate? Is by testing, live testing, and back testing. All right, an average trader that is transitioning from a demo account to a live account doesn't know their win rates. That's why they'll keep blowing accounts. And an average trader that does demo accounts would only do demo for, let's say, 2 weeks or about a month max, majority. 1 month max of practice, and then you think you have arrived. That's why we blow account trading. You know, Forex trading is the only business that people start really without any form of certification. You don't really need to go to school to say you're now a Forex trader. Anybody can become a Forex trader. There's no way you become a medical doctor without going through 7 or 10 years of education. You cannot be a lawyer without going through law school, but you can be a Forex trader without even going through any form of education. So the Forex trading industry is filled with a lot of quack Forex traders that are not educated. So we have a lot of uneducated traders. That's why people are losing money, because you are not educated. And one education that you must receive before you start trading live is to know your win rate. And that win rate, you are the one that will determine it based on your entries, your live entries on trades. My recommendation for anybody that is serious about taking trading seriously is you want to practice for 3 months. Practice. Take trades on your practice account for 3 months. After 3 months, and within that 3 months, you are doing all your journal. You are doing your trade journal. You are writing down all the trades and the outcomes. So you know exactly the outcome of each trade. So in 3 months of trading, let's say you've taken 100 trades. You now do your plus or minus. How many trades did you win? How many did you lose? That's what will give you accurate win rates, not by taking 10 trades or 20 trades. Okay, take a lot of trades. Okay, that'll give you a large sample size to work with. That'll give you an accurate win rate. So if your goal is to trade on an aggressive account, you want to be certain about your win rate. All right, because your win rates is now what will help you determine how aggressive you want to be. If your goal is to flip accounts, is to be aggressive, you should have a risk management plan. It's not for everybody. You don't have to be aggressive, right? You can just choose to stick to conservative and make your money little by little. All right. So let's say your win rate is 50%, for example, and then you're not very certain. That means if you take 10 trades, you win 4 or 5. Okay, so that means you are likely to have six losing streaks, possibly. So if my win rate is 50%, I will recommend that the highest I would like to be aggressive is to risk 10% of my account. 10% of my account per trade. Okay, 10% per trade. So that because my win rate is 50%, that means I can actually lose 5 trades back to back and win the remaining 5 trades. So I want to make room for losses so that I'll create room to recover. All right. So if my win rate is 50%, I want to consider my losses first. My losses, that means I can lose 5 trades. So if I'm risking 10% per trade and then I lose 5 trades back to back, I would have only lost 50% of my account. That means I have another 50% of my account to recover those losses. Guys, let me know if I'm making sense so far. Type in yes if you understand what you've been learning so far. Give me some feedback, guys. All right. If what I'm saying makes sense to you so far, type in yes or makes sense in the chat box. Okay, and then we'll continue. All right. All right, good. Let's go. All right. So if you want to be aggressive and then you know your win rate is 50%, you want to consider the possibility of losses. If there's somebody writing on my screen, can we not do that? Okay. You can ask your questions in the chat box. Okay, and then I'm going to answer you. And at the end of this class, I'll give you the chance to ask your question verbally, okay? All right, so if your win rate is, let's say, 60%, that means you have a possibility of losing 40% of your trades back to back. There's a possibility to lose 4 trades out of 10 trades back to back. So I'm going to leave room. I'll leave a room for those losses first. That will help me determine my risk or my maximum risk. So if my win rate is 60%, the maximum I would like to use is somewhere around 15 to 20%. Let's say 15% risk. So that if I lose 4 trades back to back, I would have only lost 60% of my account. That means I have 40% left to recover on an account that's aggressive. All right. So the higher your win rate, the higher risk you want to be taking on that particular trade. So you just don't use risk at random. You want to know your win rate first. That will guide you and inform you as to what you should be risking on your account. All right. Now, once you determine all of this, how do you now know the right lot size to use? Back to this particular question here. Now, majority of us know this particular tool called the position size calculator, right? Even though most of us know it, we still don't use it. Position size calculator. So I'll just run through it very, very briefly because I want to believe that it's a popular concept that we all know. Now, this particular tool here is going to help you know the right lot size you should be using per trade based on your risk parameters. Okay, so we are going to go to our browser right now. And on your browser, oops, let me share my browser. So my browser, you want to search for position. So search for this keyword, position size calculator. Okay, so when you search for this, you're going to see different links here. And you want to select the one from my FX book. So let me just copy the link and then I'll paste it in the chat box so that you can also possibly bookmark it as well on your browser. So that's a link on the chat box right there. All right. So when you click on that, you'll be taken here. All right. It's a my FX book product. And if you are into mobile apps, if you go to your Google Play Store or your App Store, you would also see variations of this that'll do the exact same thing. All right. So personally, before I enter any trade and every trade, I usually come here. And I recommend that you do the same as well. Because I need to know, because I'm thinking about risk, I'm thinking about longevity, I'm thinking about staying in the game much longer. I don't want to be trading in this few months, and then after a few months I stop trading because I lost money. Right? I want to have longevity. And how do I do that? I understand my risk properly, and then I now come here to know the right lot size that I should be using per trade. So let's say you are on a currency pair called GBP USD. So over here, you have been asked for the currency pair. So you want to change it and then type in the currency pair that you are trading. If it is Euro JPY, let's type in Euro JPY. If you're trading with Euro, so come here, put in the currency that you are trading on your setup. Account currency, USD, if you're trading a USD account size, this is how much you have in your trading capital. So let's say I'm trading $5,000. Okay, so put 5,000 there. Okay, let's use something we can. So let's say you are trading $500. Okay. You are trading $500. What is your next question? What is your risk ratio? So you now go back to our understanding of, are you trading, do you want to be conservative or aggressive? Which account are you trading on? So let's say you want to be conservative, you're trading on account that's conservative. So that's 5%, between 1 and 5%. Next form to fill here is the stop loss in pips. Okay, so your stop loss in pips is the distance from your entry to where your stop loss is, that value in pips. So let's say your stop loss is 10 pips from entry. You put 10 there. Leave this trade size as default. And then you click on calculate. Okay. You can see under sizing, you see it's 0.33 lots. So for this particular trading setup that I'm about to take entry on, based on my entry, based on the currency pair I'm trading, based on my trading capital, if I want to lose, if my risk is 5% of my account on this trade, this is the right lot size that I should use, so that if that trade goes against me, the maximum I'm going to lose will be 5% of my account, which is what? $25. All right. So that way you know exactly how much you will lose if things don't go your way. And in terms of psychology, doing this will also help you put things in perspective. It will help you manage your trade properly. Because before you enter a trade and then you do this, you'll be told how much of your capital you stand to lose. In this case, just $25. If you are not okay, if this money feels as if it's too much for you, if you cannot stomach this possibility of loss, then you just need to reduce your risk. You only want to go further and enter your lot size and open a buy or sell trade on your MT5 if you are fine with this money right here. All right. So only go further if you are fine, if you're okay with losing this amount of money. If you're not okay with losing it, reduce your risk. So let's say my risk now, let's say 3%. I change from 5% to 3%, click on calculate. So that means my lot size will now be 0.2 lots, and then I will only lose $15 if that trade does not go my way. All right. And you have to be very, very careful about using the right values here, because if you take another currency pair, so let's retain, check it out, let's retain all of these parameters and let us just change the currency. So if your goal is to trade Euro JPY and then you make a mistake and go and put in, let's say, USD JPY. Okay, click on calculate. You will see that, okay, oh, it's same. Let's say you put in NZD JPY. Go and calculate. All right. Should change. Let's do that again. All right. Bottom line is that every currency pair here has different values in terms of the value per pip. And if you're not using the correct currency pair that you are trading, right, the values that you get will be different. That means on some currency pairs, you'll be risking much more. So let's do this quick one real quick. Account size, $500. Risk ratio 3, stop loss 10. Okay, calculate. All right. So sizing is now 0.2 on this particular trade on NZD JPY. So let's say I'm trading, you now make a mistake and put, let's say, Euro USD. Okay, you can see you are now lot size will now be 0.15. You can see that difference. So that means you want to be very, very certain and be careful when doing your risk here. So this is how you calculate the right lot size for you. You use the position size calculator, right? And this will only take you maximum a few seconds. Once you master this, under 10 seconds or 50 seconds, you've gotten the right lot size to use on all of your trades. Okay, I recommend it. Before you take any trade, come here and do this real quick. All right, let's go back to the chart and let's round up this session. Okay, so you do this either for accounts where you want to be conservative on or an aggressive account, right? Very, very importantly, on an aggressive account, you want to know your win rate, okay? Because that's what will determine the percentage in which you want to be aggressive on. The higher your win rate, the higher you can be aggressive. If your win rate is very, very low, right, you want to go low on how aggressive you can be. All right. So the other aspect of risk management that I want to talk about briefly is the concept of risk to reward. Okay, risk to reward. So I say this a lot. I say it a lot. When it comes to the Holy Grail, let's write it down. Holy Grail. All right. If there's a Holy Grail in the financial markets, it is not in a trading strategy, because there is no 100% win rate. I don't think anybody can boast of having a win rate of 100%. Okay, it does not exist. Forget about what you see on YouTube, people saying that their system is, you see some people say 98% win rate. If truly they have that kind of high win rates, then trust me, they should be the richest man in the world right now. Okay, they should be. Because if I know that my system is 98% profitable, I am going to find a way to be trading $1 million account. And on each trade, I'm going to be risking at least 30%. And I'm going to compound it till I make $100 trillion. Because my win rate is 98%. That means I'm going to win at least 9 out of 10 trades. I'm going to win. So I'm more likely to win a trade than lose a trade. So I'll go all out in terms of how aggressive I can be. All right. So because the majority of traders cannot have very, very high win rates, on the average, what you are going to experience as a Forex trader will be a maximum 50% for most of us. Maximum, your win rate will be 50%. That means when you take 100 trades, you most likely win 50 trades, and then you lose 50. Or maybe you lose 40, and then you break even 10. All right? Now, how do you now make money from here? Now, talking about risk to reward, I'm talking about the ratio of your stop loss to your take profit, right? The ratio of your stop loss to your take profit. So let's write this down. The ratio of your stop loss to take profit. What am I talking about? That means my recommendation when it comes to risk to reward is at least a 1 to 3 risk to reward, right? You want to have a risk to reward, okay, of at least 1 to 3. Okay, what does that mean? It means that if your stop loss if your stop loss is 10 pips, right? Then your take profit should be what? 3 times your risk. That's 3 times 10. So you should have a take profit of 30 pips, right? If your stop loss is 5 pips, let's say you are scalping, you should exit that trade at least 3 times 15 pips reward. All right. Don't ever find yourself in a trading setup whereby you are risking as much as you are making. That means you are risking 10 pips to make 10 pips. Nobody does a business and then your risk is equal to your profit. Okay. So if you invest 1 million naira into a business, I'm sure you're not expecting a potential profit of 1 million naira. That's not your goal, right? If you are going to start a good business, you want your profit to be much more than the investment that you made. Likewise, why should you trade in the financial market and then your stop loss is the same as your take profit? Some people's stop loss is even greater than take profit. You see some people use a stop loss of 30 pips and then take profit of 20 pips. They will say that they are giving their stop loss room to breathe. Okay, that's not a smart move when it comes to trading. It is not sustainable. And then I'll show you why it's not sustainable in a nutshell. All right? Don't even use a risk to reward of 1 to 2. That means don't risk 10 pips to make 20 pips. If you are doing risk to reward of 1 to 2, you are going to be getting average results. If you are fine with average, knock yourself out. Go ahead with that. But if you want to start experiencing massive results and be happy about your profit, your target should be to make 3 times your risk on every trade that you win. All right. So let's do a big, quick math, and then I'll show you why risk to reward is holy grail. So let's say you are doing very, very well, and then you have a win rate of 45%, like Adekola. 4% win rate, or let's say 40%. Okay, that means you're going to win. Let's say you win 4 trades, and then you lose 6 trades, right, out of 10. Okay, win for loss 6. And so let's say you determined your risk. So if your risk on each account is, your risk per trade is 2%. If you win 4 trades, and then your risk to reward is 1 to 3, for example. Okay, so let us do this again. Now, your trading system is what? You have a win rate of 40%. And your risk per trade is 2%, so you are being conservative. And you have optimized your trading strategy to give you a risk reward of 1 to 3 on every winning trade. Okay, if you win 4 trades, that means on each trade, okay, so let me do this so it's very easy. So on each win, because I'm risking 2% per trade, my risk reward is what? 1 to 3. That means if I win 1 trade, it will be 3 times my risk. So on each win, I'm going to make 6% profit, right? And on each loss, I'm going to lose what? That 2%. So that's what I'm risking. All right, good. Now, if I win 4 trades, that will be 4 on each win. I make 6% profit, right? and then I win 4 trades, that will be 4 times 6. I've made a profit of 24%. And if I lose 6 trades, right, I've lost 6 times 12 times 2, which is, okay, 12% loss. At the end of the day, I'll still be in profit of 12%, 12% profit, because I used a risk to reward of 1 to 3. Now, guys, you must realize that this is the win rates that the majority of traders are going to experience in their lifetime. Okay, and it's not actually a bad win rate. It's very, very awesome. Okay, and you see that even with a bad win rate or with a low win rate like this, you will still be in profit at the end of the day because you have a solid risk to reward. This is the holy grail. Now let's do the same scenario, okay, for a lesser risk to reward. So let's say your risk to reward now is 1 to 2. You are risking 5% to make 10%. You are risking 1% to make 2%. That means on each win, you are going to make what? 4%. And on each loss you lose 2%. Right? So if you win 4 trades, that will be 4 times 4. That will be what? 16. You have made a profit of 16%. If you lose 6 trades, you have lost 12%. So at the end of 10 trades, you would have just made a profit of 4%. You are still profitable at the end of the day, but it's somewhat average. Can you compare 4% to 12%? You have made, by risking 1 to 3, you have made 3 times profits than risking 1 to 2. Now, I said, if you are putting risk management and management into perspective, and then you are considering risk to reward, you want to have a minimum risk to reward of 1 to 3. That means it can be more than this. It can be 1 to 5, it can be 1 to 8, it can be 1 to 20. So the work you now have to do now is to optimize your trading system to give you a better entry than what you're currently getting, so that you now start having some sort of a tighter stop loss and a greater take profit. Okay, so you want to optimize your trading system. All right, let's do an example for someone that has a very, very poor win rate, but very good risk reward. So let's say your win rate, based on your trading strategy, your win rate is, let's say, 20%. But your risk to reward is, let's say, 1 to 10. Okay, so that means you take 10 trades, but you are only right 2 times out of 10 trades. But the times that you are right, you are making 10 times your risk. So on each win now, with this particular parameter, on each win, if you are risking 2%, you are making 10 times your risk. On each win, you are making what? 20%. Oops. You are making 20% profit on each win. And on each loss, right, you've only lost 2%. All right. So this particular win rate now, you win 2 trades and you lose 8 trades. Okay. So on 2 wins, you win 2 trades. On each win, you make a profit of 20%, and times 2, that will be 40% profit for those 2 trades that you won. And you lose 8 trades. That's 8 on each loss. That's 2%, right? So, and you lost 8 trades. So that's 8 times 2, which is 16%. Minus 16%, minus. So at the end of 10 trades, you still be in profit of 24%. You see now? Even if you had a very, very low, you had a terrible win rate, terrible, but your risk to reward is solid. At the end of the day, you are still going to come out profitable. Okay, guys, this risk to reward is the holy grail. Okay, is the holy grail. When it comes to trading in the financial markets, having a solid risk to reward combined with good win rates, even bad win rates, okay, is the holy grail. What if you now have a very high win rate, like 50%, and then you also have a risk to reward of, let's say, 1 to 10 on each trade that you win? You are going to be unstoppable, so that even if you lose trades, you will not be really concerned, because you know that the one trade that you win will make up for the losses. Okay, so talking about losses in your journey as a forex trader, you cannot escape it. One way or the other, something will happen. The market wouldn't work for your trading strategy at a particular period of time, and then you start having losing streaks. You start losing trades back to back. So let's say you have 5 losing streaks. That means you lose 5 trades back to back. Okay. So let's say your risk per trade was 2%. Okay. If you lost 5 trades back to back, you would have been in 10% drawdown, right? 10% drawdown. Okay. So if your risk to reward is 1 to 1, okay? If your risk to reward is 1 to 1, how many trades will you need to win to recover these losses? So let me make it clear, okay? If your risk to reward is 1 to 1, that means on every trade that you win, you're only making 2% profit. Okay, and then you're already in 10% drawdown. How many trades do you need to win back to back to recover this loss? Please put your answer in the chat box if you are good at math. Okay, how many trades do you need to win back to back to recover the losses? David said 5 trades. 5 trades, good. Do you know that winning 5 trades is winning 5 trades back to back is a lot of pressure? Honestly, it's a lot of pressure to put yourself under, that you must win 5 trades back to back to recover. A trader with a low risk reward might find it hard to recover when he or she is in a drawdown. But if you have a good risk to reward, you will bounce back much faster from your drawdowns. So now let's say your risk to reward is 1 to 2, for example. 1 to 2. That means on each winning trade, you're going to make 4% profit. So in order to bounce back from this 10% drawdown on a risk reward of 1 to 2, you need to win how many trades? Let's say 3 trades. You need to win 3 trades. Okay, and then that will give you 12% profit, right? On a 1 to 2 risk reward. But if you are trading a 1 to 3, 1 on 3 RR, each trade will give you what? 6% profit. That means to bounce back, you only need to win 2 trades. And that'll give you this same 12% profit. All right. So the pressure on you to recover when you have good risk reward will be less, and it will be easy for you to bounce back. Let's now say you have a good risk reward of let's say 1 to 5, for example. Okay, that means each profit you make, each win, you make 10% profit. So you have 5 losing streaks. You lost 5 trades back to back. With a risk reward of 1 to 5, it will only take you one trade to recover. If you have that kind of trading system, you are going to be at ease, so that even when you lose trades, you are not bothered, because you know that you only need to get it right once. Once you get it right once, you handle all of these losses. Okay, that's the mindset of a trader, of a consistently profitable trader. Okay, they usually have very good risk to reward, which you don't have. All right. When you put these things into perspective, it's going to set you apart from everybody out there just doing trial and error. All right. Getting results in the forex market is not trial and error. Nobody is profitable consistently by mistake. It's a well thought out process. They know what they are doing. If you see anybody making money constantly in the forex markets, they know what they are doing. Trust me. It does not jump on people. All right. And one thing that a winning trader has in their arsenal is they have a good win rate, and then they have good risk to reward. So you want to go back to your drawing board now and optimize your trading strategy to give you at least 1 to 3 risk to reward. If you see a trade setup that doesn't have the potential to give you 1 to 3, that trade is not for you. Look for another trade setup. All right, only enter those kinds of setups that will give you higher potential for profit. All right. Do you have any questions, guys? We have been here for over an hour now. Let's wrap this up. Any questions, guys? Any questions? Let me know if this has been very, very useful to you. Give me some shout out in the chat box. Just type in something to let me know that we are getting value or you learned something from today's webinar. All right. While you're doing that, if you have any questions, feel free to type in your questions in the chat box. Or if you want me to unmute you so that you can ask your question, signify, and then you're going to be unmuted. All right. Give me some feedback in the chat box based on what you've learned today. All right. Faith said it has been awesome. Michael says, how do beginners meet up? Michael, can you be a bit more concise with your question? You can just rephrase your question, Michael, and I'm going to answer you. Meet up as how? Okay. Do you mean a physical meetup or meet up in what way? Udechukwu says it means a good reward should be either exactly. Okay, at least 1 to 3. Okay, so Michael said, I started a class today. So Michael, if you are a beginner, what part of Nigeria are you joining from, Michael? Are you in Lagos or outside Lagos? If you are in Lagos, we have a weekly beginners workshop at our office at 10th, so you can walk in and get trained. Okay, so you get trained the beginners curriculum, and that will get you up to speed. If you are not in Lagos, we also have the online version for the beginners. But access to those workshops, you will require to be a client of TenTrade, and your account should also be funded with minimum $100. So that gives you access to the beginners workshop. All right. So Michael, if you're interested, or if anybody else is interested in participating in next week, so the next beginners workshop is next week, from Tuesday next week. Okay, online and physical. If you are interested in being a part of that beginners workshop and you want to fund your account with minimum $100, you can drop your WhatsApp number on the chat box right now, and you are going to be contacted. We're going to add you to the platform to be a part of the workshop. Now, that money you are funding is money that you are going to use to trade after the workshop. So you are not paying anybody. So access to the workshop is free, but you are only showing your commitment to use what you will learn by funding your account. All right. So that's that. So anybody that wants to partake in that should drop their WhatsApp number right now in the chat box. All right. David Mark, okay, David Mark, do you want me to unmute you? I can see your hand is raised up. So David Mark, you can unmute yourself and speak if you want to speak. David, go ahead. We can't hear you. We can't hear you. Yeah, we can hear you
now. I said, if my total account size, like I want to risk 5% of it, and I have used position size calculator to know the lot size I should be using, is it possible for me to, like, and maybe I want to, like, I have second thoughts on maybe this trade go against me, maybe for me to enter another trade again? Can I possibly use like split that lot size, that the lot size that was being given of that 5%? Or
okay, can you come again? So you use the calculator for 5%?
Yes.
And then it gave you the lot size to use?
Yes.
And then you're asking if you can split that lot size into two?
Into two, yes. Maybe
yes, of course. That is twin trading. If you want to twin trade, you can do that. But just use the same stop loss for it. That's all.
Okay. Thank you.
You're welcome. All right, so Michael, you'll be contacted within 24 hours. So do we have any other question? Any other question, guys? Any other questions before we call it a night? The question, is that question applicable to two trades or to twin trading? Chidima, should I unmute you so that you ask a question verbally? It's not clear. For every trade that you want, yes, twin trading, yes. So if you plan to twin trade and the calculator says that you should use a lot size of 1.0, which is standard lots, what you can do is to open two positions and break 1.0 into two, either 0.7 or 0.3, depends on how you want to do your twin trading. All right, so you just simply break it, or you break it into three positions or more. So it depends on how you want to do your twin trading. But overall, your positions shouldn't be more than the 1.0 on that particular trade. Okay? Is that clear, Chidima? All right, awesome. Any more questions, guys, before we round up? for run up. All right, guys. So if you have any questions, feel free to reach out to your account manager for questions and engage in the groups as well. We have a group for education. If you have any questions, feel free to type your questions in those groups, and then you'll be properly attended to. And the replay of this session will be made available to funded clients of TenTrade so that you can access it, go over it again and again. Yes, the program in Lagos is happening this Saturday. Hold on, let me see if I can quickly bring that up. Okay. It's called the Ultimate Trading Formula. You'll be exposed to amazing concept that will help you take your trading game to the next level. If you have been blowing accounts, come for that particular seminar in Lagos. You learn how to stop blowing accounts. If you want to learn how to get access to mentorship, how to get full access to what TenTrade has to offer to take your trading game to the next level, right? Come for the seminar, right? And you learn all about TenTrade and how we can help you. Yeah, so give me a second. I'm bringing up the banner shortly. All right, so let's see if I can quickly get that up. Okay, so let's share this real quick. All right, so we can all see this particular banner. So this is the upcoming event this Saturday at the TenTrade office. It's called the Ultimate Trading Formula. It's happening at the TenTrade office here in Okpebi, Lagos, just opposite Spa Okpebi. We have two sessions on Saturday. The first session starting 10 a.m., 9:30 a.m. to 1 p.m. Second session is 1:30 p.m. So whatever time works for you, you want to be a part of it. All right. So I'm going to type in something. If you want to register, I'll put the link. It is free to access, but you need to register. I'm going to put the link in the chat box right now. Oops. Hold on. So you want to register and secure your seat. Truthfully, we have limited seats available. Truthfully, all right? So it's going to be based on first come, first serve. So the link is pasted in the chat box. So go ahead and click on the link to reserve your seat. All right, it's going to be an amazing session, power-packed, and everybody, there's going to be a raffle draw on that day, right? People are going to be winning cash prizes, winning trading bonuses, right? Winning t-shirts, winning amazing things. And for the first 20 people that also attend, we're also giving people, I think, about $10, right? So you can come and then just come and make money. All right, so I mean, there's a high chance that you will make money one way or the other when you come for the webinar, for the seminar rather. So it's happening this Saturday. Lots of goodies are available for you to be a part of. So you will learn how to trade Forex. You'd also get surprised with amazing gifts and bonuses. All right. So guys, let's call this a wrap. I look forward to seeing you on Saturday if you are in Lagos. If you are not in Lagos, you want to engage with TenTrade education. All right. Christian said Ojoro Council. Christian was here last event. You can also come again and then also be a part of this. It's going to be different content as well. Okay. So if you're out of Lagos, you want to engage with the education we have on TenTrade. All right. And join the beginner sessions. If you're a beginner, we are also going to be starting fully our intermediate workshops as from next week. All right, by intermediate, I mean for advanced traders, you'll be learning advanced concepts. So there's now a structured schedule where we're taking you these things for a month. You'll be learning about intermediate concepts. All right, so engage. All right, and trust me, with 10 trade, the sky is the starting point. All right, I want to wish us all the very best. David Max is asking a question: do we have any class again? Yes, we have another session on Thursday. So be on the lookout. You get information on the WhatsApp group that you're a part of. Okay. So I want to thank everybody for being a part of this session. I've had an amazing time sharing with you this concept. And I wish us all the very best. The week just got started. So that means plenty of things to trade this week. I wish you all the very best in your trading journey this week. May the market be on your side. More pips. All right. And I wish you all the very best. Till next time. God bless you. Good night, guys. Cheers.